All right, well, elsewhere, NYSE-listed Navigator Gas made headlines when it joined the Russell indexes as part of the Russell Index reconstitution. That took place this past Friday and officially took effect yesterday. Navigator Gas, which owns and operates handy-sized liquefied natural gas carriers, has been added to the broad market Russell 3000 index and the small cap Russell 200 index. So these indices are reconstituted annually by re-ranking companies based on total market cap as of the reconstitution rank date. Following the announcement, Navigator Gas CEO Zacho said in a statement that it represents a, quote, significant milestone, end quote, and added that this, quote, represents a significant validation of our consistent earnings growth as well as our commitment to safe and reliable operations, end quote. Now, ahead of this latest announcement, JD Durkin sat down with Zacho, who explained why he is so optimistic when it comes to Navigator Gas. Let's take a listen.
We're doing well right now. Time is good for Navigator Gas. We came out of the first quarter with record revenue and also a very robust bottom line. So we were happy coming out of 1Q with a great result. And now things have changed a little bit. It's been a dynamic second half start with the trade war and the tension in global trading, but it seems to be calming down for us now, and we really appreciate that. When it comes to our markets, we're transporting compressed and cooled gases, and here demand is good, and we think the supply situation is under control. So all in all, the outlook is pretty good.
There's no doubt we are operating on an economic backdrop of a lot of uncertainty, as I'm sure you've heard, but I know you just wrapped up your shareholders meeting today. Talk to me about the preparation that goes into that type of event, and what was your message? Yeah, no, we have a shareholding structure where we have two large shareholders at about 50% of total shares out are owned by them. So we don't have a lot of adrenaline in the blood when going into the shareholders meeting because we know that we have the votes that we need for it. But it was nice to do it. We had it here in Midtown Manhattan, and it's always a big event for us. I know that you co-own your own export terminal. So first, talk to our viewers a bit about what that is for anyone who maybe only has a bit of a familiarity with the general export terminal space, and how has that been supporting your shipping business in the last few months? Yeah, we have a 50-50 joint venture with Enterprise down in Texas. It's in Morgan's Point in Houston, and what we do is we export ethylene out of that terminal. We've been doing that for about 5 years, and this year we started out by expanding the capacity by just over 50%. It's doing well, the terminal, and we are supplying ethylene, which is a building block for commercial or consumer goods globally. It's used in plastic productions and similar. So it's doing well. Demand is great. It's growing, and we're shipping a lot of ethylene out of Morgan's Point. Yeah, you mentioned some of those pain points on the general industry as a result of the ongoing trade war. So I'm really interested how you and your team are approaching things like capital allocation decisions. What do those decisions look like, knowing that we're operating in an environment that is subject to change pretty quickly? Yeah, I mean, what happened when we saw things were getting a little bit difficult was that we were quick in going out, tapping the bond market, raising cash there. We did a refinancing of $300 million at the lowest margin ever. So we secured that we had lots of cash resources for the company. And that meant when things were calming down a little bit, some of the trade war tension was receding somewhat, that we had the ability to go out and buy back our own shares at what we think is a low share price. So we've been able to take advantage, you could say, of the volatility in the market to strengthen shareholder returns. So that's been an important part of our capital allocation in the short term to raise cash and use it for share buybacks. But we do have a very strong balance sheet. We've paid down debt over the past couple of years, and right now have a net debt to EBITDA of 2.6%, which gives me a lot of comfort. It makes me sleep well at night, and it also gives us opportunities, you could say, when things are difficult to make maybe a more growth-oriented move in the near term.